I'm going to do a review of what the market was like today, Wednesday, May 8th. Let's also take a look at where we've come from. The market was really nice in this whole part as well. So, to put things in context, after the entire rise, the market closed around here. And this is what happened at the opening yesterday. This drop was very, very nice with the help of what? Of SMT? What happened here? Look how at the moment over here in London, we left this low in the S due to a small fractal over here that the price had kind of validated to make this continuation. It turned into a double bottom for the S with that, right? And the Nasdaq had simply fallen more, so the S was making new highs, while the Nasdaq was still around here within this high. And what happens over here before the opening? Look how the Nasdaq comes and takes out this low, but the S was already making new highs up here, while the Nasdaq was still in here. The Nasdaq comes and takes out this low to hit a fractal responsible for this, while the S was simply making a pullback to its previous area. It was simply the pullback, so look how the price internally has in the sack in 1 minute. What it did was a low, takes out the high with a body, taking it out with a body, returns, and takes it out with a body. So probably on this first shift downwards, folks expect shorts, which were hinted at earlier. If they catch 50% of it, they'll see it scored some points. But I'm the one who always tells them that even though the system forgives and gives them scalp points, the idea is to understand why they do things. And understand the reasons and ways to learn from these market peculiarities. So I don't want that sense of divergence to be a necessity in their operations. With the concepts they have from DTFX, it's more than enough, but it's a very good complement to avoid getting lost in the market when these kinds of things happen. Well, that was the first thing. Already here. The opening arrived. So what do we have left here? Which would be all this, an area of greater temporality. We have a high, and we have a new high. The lowest point between the two highs is this one. Then that last move down before continuing to break, then already in the opening, then the price came to this. Now yes, already operating full. Nasdaq came to test around here. The 30% of all that area that was without mitigating of the swing area, and from there began to make a fairly aggressive flip from the origin that was generated around here. Let's see. Now, let's stick with the Nasdaq. From the origin that it left, from the opening. I'm not going to look much to the left really right now, in order to not take too much time here. And now that came to the flip and left, ready, an accumulation here. It gave it quite a lot. I gave it to make a new high until it finally rejected, and with that rejection it began to go to the market. In a minute, it was also a rejection. So once we overcame this responsible party, who was the one who tried to give that continuation? You know, that responsible follows the origin. And around here, the tap and the double bottom are happening from this. 30 a flip also happened around here. So the price ended up overcoming that and the market already closed. Around here in this area, under 50% of this, which was in confluence with its responsible party. 50% as well, and the market reached there to make that final move of the day around here to close so well. Now around here, yesterday, Asia and London stayed within the range without doing anything noteworthy. And here, the price starts dropping before today's opening, breaking everything. By the time I analyze the market, it's already falling. I start to see where we are reacting. You already know that there's no need to anticipate anything. If I know I had a strong movement, I start to see if I got here before the opening, to see what's happening. And I found this, and that's it. We're having a strong drop, and the price stopped here. So I start to see what we are reacting to, and I look to my left, simply that we had this zone from Monday. And over here, there was a flip that had set the price with a candle pattern at low, high, low. It breaks the high, retraces to here, but that pullback hadn't touched 50% of the flipped fractal. So I was just waiting at that moment at the opening to see if it might go down to touch it. So that was the first thing I was watching. Let's see if I suddenly pulled that off, but no. It appeared at the opening and immediately went up. I don't know if it managed to surpass this. It touched it to the tick, that internal low. So nothing. There was the double bottom with a flip from 2 days ago. That's the origin. And in another time frame it was a wick. It was this wick, and I turned on. I know if it reached the 50, then when I noticed it reacting at the open, the possibility for the double floor with that hidden ascending cover was already more likely. And that's it. If I see this linear movement happening at the open that starts pulling out everything, then the first thing I see is that it's going to seek the price. So, given that there are so many fractals in 1 minute, what do? I keep going up until I find the low of the higher time frame and start looking for points of interest. And since this one is a bit ambiguous because it was generated after this low was wicked, that's when I looked at the S again. In fact, I was mostly looking at the ES during that rise because it was almost clearer. There was a low here, and notice that this fractal, the area of interest, was indeed before the break of this low. So that was the first thing I was looking at. The price got here, it didn't take it out by a tick, which we've seen in order flow, and then it started making this downward impulse. But the Nasdaq had already extracted this fractal and hadn't reached what I was watching back then, which in my view would theoretically be responsible for the Nasdaq, because all this was the point until this wick was made, when this was drawn, and only then was this generated. So I didn't want to take this as responsible. Then the price on the Nasdaq didn't reach here and was holding it back. So I stayed quiet. Here, I stayed quiet for a moment. I'll show you what I was actually waiting for, because I was indeed looking for the long in view that everything was still moving towards here. I would have liked them to screw this up and for the Nasdaq to have already reached the top, but since it didn't, I kept looking for the longs, because that was my first magnet. Now when I see that the Nasdaq reaches here, but the S also goes without screwing here, this responsible one now makes me an idea. Multi-temporality. Again, we have the area of greater temporality. Shift to right. This was the last thing that had been left. What we had seen around here. Then another one was generated in 5 minutes. And then another one, which was the one that made the downward change. It is clear. The pullback was made. The pullback was made around here. And the S had made the pullback to its change of structure. Also in 5 look, with body closures and everything. Despite the fact that the Nasdaq made rejections. The S had reached its 30%. And from there, the drop had started. So I said, okay, if we already have the break of greater temporality, we have all this area of greater temporality, its origin, and what remains in the intermediate form, what we want to liquidate. Then the typical pattern of this price goes away. Liquidity starts to generate around here, and where we want our optimal trades from around here, then this rises. Price reaches here. In short, the market does it in different ways. Everything. But see that the theory is basically the same before starting all these things here. Seeing that he chose Nasdaq over turning the responsible party, I objected. This is going to liquidate this. And it ended up reaching the origin. But look, then how nice it is when the Nasdaq went looking for that origin that it had already mitigated the day before, which we saw in a previous review. When one has already mitigated that reason to go lower and the other hasn't, then when we come in the opposite direction, the one that hasn't mitigated it tends to go, while the one that has already mitigated it holds its intention. So here it happened again, super nicely. When I said that it started to break and this kept cabling, I said, okay. The narrative was made with what the Nasdaq is going to be from this origin. The meltdown was intense, without much confirmation or a double top. It flipped with a quick retracement, didn't even swipe here, and kept going. Look how in just 2 days the SMT has been super useful. Knowing how to apply it is extremely beneficial. What remained for us on the S? When the price started to drop like this, we were left with the responsibility of breaking this responsible. So the S held this entire area. It started doing the double roof flip and fell until it hit the one responsible for breaking the responsible and stayed there. Did a flip, price came back later and souffled. Up until this point, it was almost closing time. There was not much else that could be done unless it was a Friday. Maybe. And the Nasdaq, well, it pulled back up to this point down here. I'll tell you then. So what I'm looking for is taking this internal zone, this last downward move. After this low, high low, everything is internal like this. But it's like that last downward move. It couldn't catch. Well, it dropped to 50% of that. Well, so, having seen the SMT, which was the most interesting thing these days, and the nicest thing price action did, now I'll tell you that I was looking at the Nasdaq. Alright, so first of all, as I mentioned, I wanted to see if at the opening it would hit that 50 from that flip that was over there. It didn't touch it and started moving away. So I began to wait a bit to see what it was going to do with these things. The price simply came around here, made a high, took this out, aimed at this origin that is over here, and pulled back to the area that was left unmitigated. Around here in the opening, the responsible was touched. It started to go the price, and with that, it started to go with the flip it did on lower time frame here from that responsible candlestick pattern in 5 seconds, and started to do this and kept going. So let's see if I can find where I was looking for. I saw it now. Well then, seeing that the price started to move like this, and this worked out, it never came back to this area. And I began to see that while flip remained in the pullback to a previous swing was working, then it gave a candle pattern again. It removed the 50 and it started to move again, which leaves us a flip also in this structural flip in this time frame here in this other area. So I started seeing that, okay, this way is not giving me much room, it's not coming back, the price is moving away without me. I don't worry, I'll eventually find my entry. So there's no problem. And over here, when it started reaching what was arriving at the responsible party that we saw earlier, Nasdaq had already surpassed that zone. It started forming this thing here. The case studies started forming this. And over here, when it hit the limit of the responsible party and didn't break it, it was like a structural change happened during this time. And that's it. We'll go to the flip. I've been waiting here. The price dropped here, touched this area, flipped, never touching the level again. I sought my first long here but didn't get it. Because honestly, I didn't want to go with this responsible party, but, well, very trending day. You see how the responsible parties sometimes have an effect. But I wanted at least a tap down here and more because it had this well-established zone, so I was expecting a wick touching the 50 and then going up. It didn't do that. When the price came back, I had the limit here. I was quite greedy. And I was also waiting for a possible sweep of this. For this area. This area was like here. It made all this impulse and took something out around here. So I was considering the amount of points from the 50 to around here to see if it gave me a 10 stop. And I was protecting it with some levels. So that was what I was doing. What I ended up waiting for. Not protecting myself with this, but with this. I've already told you that when you have area after area, you have the possibility of a wick sweeping everything until it gets to the lowest one. In this case, to decide, I left the limit off by 1 point. And immediately did this flip. He tapped at 30%. Look, there was an internal low. Tap at 30%. This fractal over here doesn't break. It comes and does the swipe of that first tap. You already know that the first tap is the one that is usually swiped to suicide the flip. So don't chase the price with FOMO always after that first tap, which is usually the false move. It happens a lot with the 50 too. It reaches to touch the 50, does a fractal pullback, wicks the low of the 50, and then it does the flip with a lot of moment. And from here, it did the flip, it became under-responsible, the 50 was here again, and here I wanted to get into the 50 again. And he didn't give it to me. I bailed, and it started to slip away, leaving me with 50. Out of greed, I noticed a 5-point difference. If I protected myself with 10, I'd also use the other 50. So, with all of this. But anyway, in the end, not ending up getting in because I was setting the limit and not going with the reactions. The responsible one was there, so that ended up holding it. Even if it had touched the 50, I still respected the responsible one. But well, the price was very, very bullish, and I ended up getting in way up there, attacking the 50 of something. I'll check it now. It had to be around here. I was looking at this origin, more or less the same thing I was seeing in this high time frame. So for all this to get here, I did the same with these areas here. And this is where the structure change happened in London, in 1 minute, with these impulses. I saw that this had remained untouched. There was a responsible one around here, and taking out this responsible one, I saw all of that. So when the price around here made a pullback, that's when I finally went long aiming at that 50, because we hadn't finished taking out this high. Right at this pullback of this wick, he goes long here aiming for that 50, and already takes profit, even with slippage, because I think it was an extremely strong candle that happened here, behind the 50. And it went up. So then, seeing that everything seemed to fail, and the ones responsible around here had already failed, the responsible one there had already taken it out, and it kept going. So it's as simple as waiting for the price to make a bullish flip, and going with that. Obviously not to chase here, not to chase the bullish candles. Wait for it to make pullbacks. Our system already tells us that when the price makes pullbacks, so why would we want to chase that? Here it gave another flip too. Such nice memories with after I made my entry. It gave this flip, took it out here to the high of this, and look how it had been after a sweep. Price returns to validate an area, sweeps to the first tap, then leaves. It touches the origin and does a reverse flip at 50. Couldn't give a bus. It came to do the double floor and left again. You see that the price fails to do a bus and is not even able to take out the low of that displacement law. There, through the fulfillment of the functions that I talk so much about, see what is being fulfilled and what is not. You realize that this really has a target. I mean, the price when it sets a magnet and is trending to make everything else fail until it finally completes its magnet, and that's it. Here it reached that high temporality origin, and the full drop started. And I had set an alert over there, but when the price was just around here on its way up, I had an alert here that I didn't remember where I set the first limits. And well, when the price came back here, I worked a bit with this area. I didn't see much price action here. I mean, once I take my trade or my couple of trades, I stop watching the screen. I don't waste time here at the computer, really. It reached 50 now of this flip that hadn't touched the price. And look at that. Almost 30 points of momentum, and then the first one I had seen. But look at that wick it made on that candle. Look at this. It's brutal. Just what I just told you. When there are those, they are like this, with the buy liquidity. I usually wait around that point, like that zone more of origin, so to speak, like the first, after all that strong movement, until this started to happen, and even then, I wouldn't have hit stop if I had the 10-point stop I had planned, but this entry would have been brutal. 50 from that zone. Almost 40 points there, in no time. The price action was beautiful, beautiful, beautiful. And with the help of SMT, well, you can see what can be avoided. Being lost is one of the best qualities you can have as a trader. Not feeling lost, knowing when to participate in a market, when to wait a bit longer. So that is one of the tools that has always helped me the most personally. And it was one of the things that gave me the best results with ICT. So it's the only thing I kept. Imbalances suddenly, but SMT is something I keep several days a week. Keeps confirming my theory of why it's like the cheat code for DTFX. So I keep using it. There's no need to complicate your analysis so much if you are in a learning process. But I leave the information so that you can understand how I use it, how I see it. I hope this can help you. If you have any questions, you know that I'm always around for you to tell me, and have an excellent rest of the week.